An historic deal to pull a systemically important bank, Credit Suisse, from the brink. Its fire sale to larger Swiss rival UBS for nearly $5 billion, an example of the extraordinary measures needed during a time of volatility and fear, says capital markets researcher Yinghao Cheng.
Given the market environment that we were in, this led to what I would call the chatter about financial crisis, because Credit Suisse is a systemically important financial institution.
Major credit ratings agency S&P cut U.S. regional bank First Republic status further, saying the $30 billion infusion it received from America's biggest banks may not be enough. Signs of trouble abound, but central bankers, including Canada's, are trying to reassure investors. Now, Chang says banks around the world are in a much better place than they were in the lead up to the financial crisis. But if investors and consumers are scared, it can cause chaos.
Regulators are worried about right now is that crisis of faith in the banking system becoming a self-fulfilling prophecy.
Some analysts see more similarities between what's unfolding now and the savings and loan crisis in America. Between 1986 and 1995, 1,300 financial institutions failed, or roughly a third of existing savings and loans associations, known as thrifts in the U.S. It came at a high cost to banks that survived, as well as taxpayers. Market analyst Greg Taylor.
And if you remember back in the 1980s, that was a period of high inflation, high commodity price volatility, and central banks were rapidly hiking interest rates to try and stem that tide.
Canada's banks are well capitalized, diversified, and tightly regulated. Many experts say even if your portfolio has taken a hit, it's not necessarily time to make drastic changes.
I've got my money in the bank, and I've got my money in my portfolio. I haven't touched it. I'm a long-term investor.
And Gaviola, Global News, Toronto.